Does Tesla say anything emblematic to you about the market? Do you point to that and say this is a sign that things are getting too frothy? And even though just a few days ago we were talking about the sell-off.
Well, I wouldn't necessarily point to Tesla specifically, but you just take a look at market valuations overall. I mean, last year's market rally, for example, over 95% of those returns we saw in the S&P 500 came on the back of multiple expansion as opposed to earnings growth. And I think that should give you some reason for pause. Does that mean that things are heading sideways or down? I don't necessarily believe that, but you should approach this with a little bit of caution.
David, would you agree with that? Even if there is multiple expansion, can that keep going?
Well, we think that the market definitely is going to slow down a great deal this year. Last year, you were up in the high 20s, low 30s. We think if you get 9, 10, 11% this year, that would be a very good year for stocks. We think part of that comes from earnings growth, part of it from modest multiple expansion. We would not get caught up in today's rally, yesterday's rally. We think the coronavirus is still a very significant overhang, possible negative, and the market is definitely going to have bouts of pessimism and optimism. Our best advice would be buy into days like Friday when there are those bouts of pessimism and the market's off substantially, and not chase days like today when all of a sudden everything is good again.
Joe, what do you say on that? And is there any real explanation for what's gone on the last 2 days? Can you put a finger on anything?
Well, I think it's easy to kind of point to the coronavirus just as perhaps being that catalyst that really led that sell-off. I mean, there's a lot of anxiety, a lot of fear around this coronavirus spreading. And I think in today's day and age of social media.
So why did the fear seemingly dissipate in the last 2 days? Is it because people think maybe it is peaking or what?
Perhaps. I think there's a couple of things going on there. First, China's been very aggressive with its response to this, and that it might be giving market participants a little bit of comfort around it. And the second thing, which I think we have to remember, is any time in history we've had an episode like this, you go back to SARS, for example, markets and the economy did sell off, of course, once it became apparent that this was spreading. But shortly afterwards, once we actually saw the virus peaked, if you will, markets and the economy rebounded. There's some pent-up demand there. And I think part of the rally today is perhaps reading into that a little bit.
David, same question to you, going back to Tesla for a moment. Is that emblematic to you of any of the overall market action in either a cautionary way, or is it a sign that, hey, the retail investors paying attention, they're getting back in? I mean, does it say anything to you like that?
It is emblematic and in a cautionary way. We think the market right now is being driven by tremendous momentum. When something is good, the market can't get enough of it. Tesla's been very good. The market truly can't get enough of it. But you're seeing it in other things. Amazon had a good quarter. The stock went up $100 billion. So if the market likes you, you're going up every day. We would tell investors, don't get caught up in those type of rallies. Don't buy a stock merely because it's going up. If something's above 30 or 40 times earnings, history has said you're really not going to do that well with it. The flip side is when the market doesn't like something these days, it really has been penalizing it almost on a daily basis. So if you can buy a good business for the next 12 months and buy it under 12 times earnings, you're also going to do very well. So we are wary of the 40-plus times earnings. We like to put new money in the low PE stocks right here. And we think there's going to be a return where value does a little bit better this year, and growth absolutely is going to slow down because you're having a melt-up right now. There are a few names that remind us of like the Nifty 50, which was decades ago, and that did not end well.
Let me ask you, final thought, Joe, are politics playing any role in what's going on here? The end of the impeachment saga, at least for now. I can't see how the Iowa mess figures into this, but who knows?
I can't figure out how the Iowa mess is having any impact on this either. It's hard to kind of wrap your brain around it. But I do think that overall, when you think about politics, I would simply add that to the list of other things like the coronavirus. We do expect this to be a choppy year. We think volatility in 2020 is going to be much higher than it was in 2019. And I would echo David Katz's comments there. You kind of want to look for opportunities into the market's weakness to perhaps get more exposure for a long-term investor.